The banks in New York and Wall Street is in absolute panic mode. Zohran Mamdani has just been elected as the mayor of New York City with some very extreme socialist policies. And these policies are going to have massive effects on the banks in New York City, on Wall Street, and more importantly, commercial real estate, which is already suffering from huge losses. So everyone, in today's video, we're going to break down these new policies that Zohran Mamdani is going to be trying to implement in New York City. And then we're also going to go over the economic consequences this is going to have. And we definitely need to pay attention to what happens in New York, because this is the financial hub of America. And if New York goes down, we're going to feel ripple effects across the whole country. So everyone, let's not waste any time. Let's get straight into the news, the facts, and the data. Well, okay, everyone, for those of you that don't know who this man is and what his policies are and what he's about and why this is going to be so bad for the banks and Wall Street and the mega rich billionaires in New York City, well, let's go over that very quickly before we get into what Wall Street and the banks are saying. So it says here, free buses and childcare are part of Zohran Mamdani's planned socialist overhaul of New York City. Now, those two policies don't seem too bad, and I'm sure a lot of the working class Americans would definitely like that and definitely benefit from that. But there's much more extreme policies than this. And even a lot of his supporters are skeptical that he'll actually be able to deliver on the promises that he made. So it says here, New York City's newly elected mayor, Zohran Mamdani, is promising to make people's lives cheaper, but even some of his supporters are skeptical about whether he can deliver. The city faces a deepening housing and cost of living crisis that has pushed thousands into homelessness or out of the city entirely. And this is definitely true, and this shows you that the economy is not as strong as they're letting on. And it's showing you that even the so-called affordable housing is now getting out of reach for the working class. This is not just happening in New York, this is happening in every major city around the world. The self-described Democrat Socialist is proposing bold measures to tackle these issues, but delivering on them will hinge on generating billions in new revenue and winning support from state politicians. Because even though the governor of New York is a Democrat, she still does not want to put more and more taxes on these banks and on these big corporations. So okay, let's get into some of the more extreme policies that will have huge effects on the markets in New York. Well, the first policy is this, everyone: freeze rent for up to 4 years on 1 million rent stabilized apartments. But here's the thing, everyone. While the scheme would not require any additional city council funding, it would need approval from the Rent Guidelines Board. Critics argue the move would fail to tackle the city's skyrocketing market rate apartments or its broader housing shortage. And it's just very simple. New York City is one of the most famous cities in the world, and a lot of rich and successful people want to live there, and they will pay whatever price to get into New York City. Me personally, I don't see the appeal. I see a lot of crime and a lot of chaos happening in New York City, but there still is a lot of entrepreneurs that want to go to New York because of its huge reputation. So there's always demand there, but they're simply not building enough apartments to keep up with this demand. So rather than freezing rents and creating a socialist government intervented program into the market, they simply just need to let developers come in there and build much more apartments to ease supply. Now, what he has done and what he's trying to do is to put forward a plan to build 200 new affordable housing units over the next decade. Now, there's going to be much more migration happening, especially, you know, we all know that there's illegal migrants being housed in hotels in New York. If they fix that issue, which he definitely won't do, that would help solve that. And with all these government programs, they never hit their targets. And really, even 200,000 is not enough. It would have to be at least double that. So, okay, this next policy is the one that's really worrying the banks, Wall Street, and all their wealthy clients. So, tax the rich. But they're already taxing the rich. They want to tax the rich more. So New York City is home to some of the highest concentration of millionaires and billionaires in the world. Mr. Mamdani argues that those at the top should contribute more to help fund the city's public services. And me, I believe in everybody paying their fair share. But the thing with these billionaires, they'll either find a way not to pay it, or two, they're very mobile. They'll just simply leave because they're obsessed about building wealth and they're obsessed about saving money. They'll simply just go to another city, take their businesses, take their jobs, and move their business to another state, and then all those jobs go to there, and then the city that they're in right now that's already suffering from, a real estate crisis, especially commercial real estate crisis, well, their economy will just continue to go down. So what is his plan? Well, what he would do is he would raise the city's tax rate, which is currently set at 3.8 percentage points by 2 points. Now, New York City's ultra rich are already subjected to the highest non-federal income tax rates in the country. And this is the real problem with socialism. Eventually, you run out of someone else's money. And it's never a tax problem. It's always a spending problem. There's always huge amounts of fraud in these government programs. There's always huge corruption. There's always governments, paying stupid amounts to contractors to build things that, are double or triple what they should be in a free market. There's maybe a lot of backdoor deals that are going on. The reason why they're paying these high prices, and that's the problem. You could tax people 100% of their income, but if you spend 110% of the tax revenue you bring in, you'll continue to lose money. And this is what's happening to America on a much grander scale. Mr. Mamdani also wants to increase corporate taxes on the city's biggest businesses. Doing all this would require approval from state politicians, including the New York governor, who's a moderate Democrat who backs Mr. Mamdani but opposes raising the tax rate, probably because a few of these big corporations funded her campaigns. And next, he wants to create a city-owned grocery store. So in a bid to bring down the soaring costs of groceries, Mr. Mamdani is proposing to create a city-run grocery store in all 5 boroughs of New York City. Again, another issue we see with these programs, it does create short-term relief, like what we saw in the 1970s when they put freezers or price controls on these items. Once those price controls were lifted, well, then we see a rapid spike with prices going up and a big spike in inflation. So it said the initiative would start as a pilot program and can be expanded if successful. These stores would buy and sell goods at wholesale prices, aiming to prevent price gouging along the supply chain. This policy is set to cost an estimated $60 million in its first phase. So $60 million is not too bad, and it'll be definitely very interesting to see if he can deliver on all these campaign promises. But okay, what you're really here for, because this is not a political channel, this is a finance channel, what is the impact going to be for the banks and Wall Street? So look at this, everyone. Wall Street girds for life under Mamdani, and there's worries about New York City's competitiveness. Well, it's quite clear. There's many people that said they're going to leave. Again, talk cheap. Everyone says this whenever there's a new election. But if this continues to be true, there's already been so many high net worth individuals. I remember, Como was saying, come back, I'll buy you dinner. Why is everyone leaving? If this continues to happen, New York City will no longer be the finance capital of America. So it says here, New York's mayor has no direct oversight over Wall Street, but the role plays into perceptions of whether the city is business friendly. Wall Street and the finance industry had broad misgivings about Mamdani becoming mayor, but many are hopeful he'll be able to moderate his positions or face roadblocks to hiking taxes on corporations and the wealthy. So that's right, even if these policies don't go through, a lot of businesses are going to start planning for the future and figure out, look, do we really want to stay in New York long term? Because it seems like no matter what politician gets elected in New York, always the answer is more taxes. They said, we have a deep interest in New York City to make sure it's successful, Bank of America CEO said at the bank's investor day in Boston on Wednesday. It's of high interest to us, and making sure that he gets the best advice from those teammates is important to us. AKA, we really know that it's the banks that run New York City, so they're going to try to find whatever way they can to influence him to tax them less than others. But it wasn't just Bank of America. JP Morgan CEO Jamie Dimon signaled the largest US bank's willingness to help Mamdani. Cities have issues and problems, and it takes all hands on decks to fix those problems. Well, I don't know about you guys, but what has JP Morgan been doing to fix these problems after all these years? While many financiers say they sympathize with the affordability issues Mamdani has raised, they express misgivings about his tax policies. What a shocker, everybody. When I look at the economics around the cost of living in New York City, and when a one-bedroom apartment in New York City is $5,000 a month, that's unsustainable. Yeah, no doubt it's unsustainable. And I don't know what the appeal is going to New York City to pay $5,000 to live in a shoebox. Surely you could just go somewhere else, pay $1,500 a month. Yes, your income may go up in New York, but you're going to be taxed more. And think about it like this. If it's $3,500 per month extra, you don't actually have to make $3,500 more. You have to make more like $5,000 or $6,000 more to pay for that higher rent because, of course, you'll be taxed more. Now, chief market strategist at Oziak in New York said, but when you think about it, the increase in taxes at the small business level and corporate level, that has a significant impact. Yes, and the impact's going to be businesses are going to leave. Now, famed investor Bill Ackman and Dan Lieb funded efforts to defeat Mamdani, whose chief opponent was Andrew Cuomo, which didn't stand a chance, the former Democrat New York governor who ran as an independent. Now, on social media, Ackman congratulated the mayor-elect, adding, "Now you have a big responsibility." Responsibility to who, I wonder? But I think the biggest industry that's going to take a hit is commercial real estate. We already saw huge losses from commercial real estate with a lot of businesses now working remotely, and this also businesses leaving to go to other states that are more business friendly, and this is only going to accelerate it. So it says here the real estate community is particularly concerned, but he has met with them and has signaled that he's pro-development. Now that's good for developers, but it's bad for long-term investors that like to lease their properties. He says he wants to make sure we get a lot of housing built, and so that's been somewhat reassuring. Because people, even the Fed is worried about the commercial real estate market and has been worried about it for some time now. Because look at this, everyone. New York Fed says banks obscuring commercial real estate risks by extending loan terms. So listen to this, everyone. This is shocking. So it says here, banks have been tweaking the terms of commercial real estate mortgages to obscure losses and in delaying the day of reckoning. And they're increasing risk to the broader financial system, a paper released Wednesday by the Federal Reserve Bank of New York. This is what's called extending and pretending. So banks extended and pretended their impaired CRE mortgages in the post-pandemic period to avoid writing off their capital, leading to credit misallocation and a buildup of financial fragility. Fed officials have been bracing for some level of manageable trouble among the banks that do CRE loans, but have broadly argued that whatever issues arise will likely be modest, concentrated in smaller banks, and slowly moving as financial institutions navigate the troubled landscape. But this report was brought out before the elections. Now we're going to see more businesses leave, more losses on commercial real estate, and we're going to see big issues for the banks. So it says here, extending the maturity of these troubled loans have made it harder to make new CRE loans and increase the chance that troubled CRE mortgages will face an imminent reckoning, noting the maturity extensions granted by banks also fuel the volume of CRE mortgages set to mature in the near term, a maturity wall, with associated risks of large losses materializing in a short period of time. So everyone, we're definitely going to have to pay attention very closely to what happens in New York, see if these policies do get implemented, and see how many businesses start to leave. But what do you think about this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.